Let us save you from a mistake that will follow you for years. Today, Christian and I are uncovering 10 dangerous house buying shortcuts you'll regret. We're not talking about the basic not getting a pre-approval stuff. It's more so of financial and strategic shortcuts people take that really don't hurt today, but it will.
Because we've watched people lose tens of thousands, get stuck in a home they can't comfortably afford, or regret the purchase within that first year.
If you're trying to buy a house here in Knoxville right now, and you are cutting corners, rushing the process, taking shortcuts just to get in a contract, this video is for you. Buying with shortcuts is really like building on sand. It looks great at closing day.
But when life happens, we're talking like job changes, rate shifts, repairs, taxes, or insurance, that weak foundation shows up immediately.
And here is the reality. People are buying later than what they expected. And the median age of a first-time home buyer right now has climbed to 40.
And truly, the fact that they're having to wait so long makes it that when they get to that point to purchase, they're like, whatever, let's just buy literally anything, anytime, right now. And that can be really dangerous.
In the next chapter, we're gonna be talking financials. The financial shortcut is the most common, and it's also the one that can trap you the fastest.
Shortcut number one is the zero down loan. We're talking like VA, USDA, and THDA here in Tennessee. Anything where you're basically starting off with zero equity.
And don't get us wrong, these are such a powerful tools. It's not that we are anti-USDA or VA.
But here's the reality of it, right? Because if there's a small dip in the market, like for instance, going from 2024 to 2026, you can get put underwater very fast. And if you get into a situation where you need to sell immediately, you might be in some trouble.
Also, people confuse no down payment with no extra cost. VA loans don't require mortgage insurance, but they often have a one-time funding fee.
USDA loans have an upfront guarantee fee and annual fees as well.
And THDA loans will have a mortgage insurance forever. Shortcut number two, using an ARM as it is a strategy. ARM is an adjustable rate mortgage.
ARMs usually start at a lower interest rate and they change over the years. And this is usually pretty risky because after that initial fixed period of the ARM, the adjustable rate mortgage, that interest rate rises year over year. But
if rates stay high and your payment resets higher, you're stuck. And if the plan was, I'll refinance later, you will really need the market to cooperate. And we never know if that's gonna happen.
Shortcut number three, and this is one that I talked about with my clients all the time. It's purchasing a home at your absolute top end pre-approval.
And no, you really need to buy according to your budget because your pre-approval might have $500,000, but you have 2 kids in private school and paid sports after school. So that is a big expense of your budget. And if you put your pre-approval to the max, those might collapse.
Being house poor is absolutely not a vibe. It is absolute stress.
Shortcut number four, very, very common. Just going online for a mortgage just because the website looks smooth.
And honestly, sometimes that can be fine, truly. There are some good online lenders. But let's say something goes wrong, right? You have a weird appraisal, you have tight deadlines, there's weirdness going on with underwriting, which does happen very often. You know, all of these things can become an issue. So having somebody local that you can absolutely go visit if you need to is really, really important for your peace of mind.
And this next chapter gets spicy. Family co-signers as house hack. Like, honestly, I'm gonna tell you, if you need that to buy a house, you're already in the danger zone.
All right, shortcut number five is having your parents or your family members co-sign.
This one gets awkward really fast because if you miss a payment, it hits them, their debt to income ratio, their future plans, their credit exposure, and many others. Really, if you need somebody to co-sign with you, being your parents or any other family member, you are not ready to buy a house, because it means that you want to buy a house for $500,000, but you are only getting pre-approved for $300,000, meaning that your income is just for the $300,000, but you're pushing yourself to the $500,000. There's some other ways to build this. Just save to build your reserves, and you can structure a plan with your lender in the right way.
Now, here's shortcut number 6 that can seem a little controversial, but buying a house that's bigger than necessary and just saying, it's fine, I'll rent out a room.
Here is the reality. If the budget collapses without a roommate, you just bought too much house.
Rental income really and truly should be just a bonus, absolutely not a survival. So if you're buying with the thought of, I'm gonna have a roommate, that's just not the way to do it.
Let's make a little pause to ask you if you're liking the content. Don't forget to like, subscribe, and tap the bell for notifications so you don't miss a beat.
All right, shortcut number 7 is skipping your buyer's agent and solely using the seller's agent, because you think that'll save you money.
And let's be real, it's called seller's agent because that agent works for the seller. That's their job.
And when you get into a negotiation situation, we're talking like repairs or the initial offer, representation matters, because skipping your personal advocate does not gain you any leverage. As a matter of fact, it actually absolutely deletes it.
And with buyer representation agreements being common now, it is important to understand the relationship and terms, then just pick the pro and run with it.
Now, shortcut number 8 is a pretty important one, and it's not really understanding the terms of your down payment assistance loan.
Some of these programs are grants, but some are a second loan on top of your first loan, and some require you to stay in the home for a period of time. And if you sell early, you are penalized.
So when you hear down payment assistance, don't just hear free money, because that's not at all what it is. You gotta ask yourself, what are the terms?
And also, I always ask my clients to ask themselves to evaluate their strategy. How long are you gonna be in this house? What are the things that you would like to do to this house? Let's look at appreciation for those years that you're gonna be in your house and see if it all makes sense for you.
All right, now we're gonna get into 2 shortcuts that cause the most panic after closing: draining your savings and borrowing from your retirement account, your 401k.
That takes us to shortcut number 9. You have emptied your bank account to make your down payment and to pay for your closing costs.
And if you close and you've got nothing left, you didn't really buy a house at all. You bought stress.
Stuff breaks, HVAC, water heater, surprise repairs, and even the normal life stuff, medical bill, change jobs, car issues. It really hits harder if you have no cushion.
So a healthy goal is having some sort of reserves in the bank after closing, so you have a little bit of breathing room. All right, here's shortcut number 10, and this is the one that I warned you about because this one is really important. I had a client ask me about this. I advised against it, but they went and borrowed from their 401k anyway, and they felt this for years after.
And yes, many 401k plans let you borrow either half of your vested or up to $50,000.
But the risk here is what happens if you don't pay on time, or you leave your job and your plan requires immediate repayment. And if it defaults, it can become a taxable distribution. And on top of that, you may also owe a 10% additional tax if you don't qualify for the exception.
And even if everything goes fine, the money is out of the market. It's no growing, it's no compounding. The truth is, the home buying process is not a race. You don't have to get there first. It is a foundation decision.
And while shortcuts feel great today, just like anything else in life, they will show up later with interest.
Remember, if you're moving here in Knoxville and you want help building a smart plan,
text, call, or email us. All of our information is in the description box below. We'll help you budget first, strategy second, house last. And the most important thing is to avoid any regrets in the near or far future.
What shortcuts have you seen that later blew up? We'll read you in the comments. See you next time.